What is up, guys?
Yeah!
Dude, lifestyle investing, Mike, myself, where we invest based off our lifestyle to build a future lifestyle. Man!
Nailed it.
Dude, that was fire right there.
Yeah, that was.
Man. Awkward.
Yeah.
Hey, so check this out. The last few videos, we were talking about Bitcoin. BofA stock. We talked a little bit about taxes too, how that's changing the financial market. So that's something to look out for. Either like City, Wells, yada yada yada.
Yep.
Now we're talking about
Under Armour. Yeah.
Boom.
It's really thanks to you because you've been watching Under Armour, and it was something in our 3 and 3 that we talked about 4 weeks ago, and I put some money in it. I got it when it was down after the earnings report, and now it's gone up. About 10%. I mean, it went from 11.75 to right now. We just checked; it's 13.01. So
it's not bad.
That's about 10%.
Yeah.
So that's pretty sweet.
I know.
It's about the idea of speculation, which we talked about a couple episodes ago, where even though the company was making money, quarterly returns showed revenue, the quarterly taxes and everything, the financials that they file. But the speculations said that the stock price needs to go down. So it's just one of those things where it didn't match up. The company's making money, but their stock price goes down, but it's based on the feeling, the perception of how it's doing in the market.
Yep.
So that's a good time to pick some up.
I know. And another thing too that I was kind of thinking about just recently is I think it was a perfect time to invest in Under Armour just because it's the holiday season. Right. Like Black Friday, they had one of the better Black Fridays in a while.
Okay.
Right. Christmas is coming up, so the online sales are going to be, pretty good.
Yeah.
So I think it was a perfect time to invest in just like a retail.
Yeah. This is like the retail time. Like last week, we were talking about getting into the Nordstrom.
Oh yeah, like Macy's and whatnot. Yeah, because they are at such a the Under Armour. It was such a undervalued price at 11 whatever. Right. Where even at 13, it's still pretty undervalued for like the revenue that it's generating and whatnot. They're just that speculation game. Yeah. And so I mean, sometimes you just got to play to that. Where if you feel like, hey, the company is still strong, but people, the stock's going to drop. Sometimes you just got to sell in that instant.
Yeah, so it's crazy. Yeah, because the people who are working on the stock exchange are the ones driving the price. Yeah. They're the ones that are saying, we think this stock is worth this much. Yeah, but then give it some time once a company proves. Because a real stock price is supposed to be company's net worth divided by how many shares there are. And eventually it will add up to that.
Exactly.
Yeah, and so it's that's the interesting thing.
It's pretty phenomenal. Yeah, you know what I'm saying? Like I don't get too involved in the stock market now. Yeah, but I more just like to take my opportunities where I can take my opportunities. Right. And so all the people like even Ronald that was on. He was really big on the analytical side and like knowing the PE ratios and all that stuff and whatnot, and it's that stuff's just over my head. But there's guys that just like so that they're able to calculate the risk so well, and that's why I always try to like just be careful when investing in the stock market, like
because no matter how much you know, you're never going to really know.
Yeah.
Because there's never, there's nobody that has a perfect record.
No.
Yeah.
100% no. Yeah. And that's why I really think like there's two ways to play the stock market. Right, there's two ways. Either one, you just play for the long term, right? Like Warren Buffett, 30 years, just put in there 30 years, done. Right? You believe in a company so much, 30 years, triple times 10 or whatever, right? Yeah. Or two, you just play off the opportunity and that speculation game, which what we did with BofA and Under Armour. Right. We saw this movement, we invest. We might not be in there for a year. Right. Yeah. We might not even be there for like a couple months. Like I'll probably sell BofA in a month and a half. Yeah. Realistically. Yeah. And so
my goal with something like Under Armour is to have it on a 1 or 2 month cycle, like I did with 3D stock, where I have the constant sell at this price, buy at this price. The only problem is, like what happened with 3D stock, is eventually the game ends. But it's okay. You get out a couple times and you make some money a couple times. So you're buying it at a low point, selling it at a higher one, keeping your margin, and just kind of recycle that a couple times as the stock goes up and down. Yeah. I had a friend that did that with Starbucks for like years and years.
Oh, really?
Yeah, he told me about it way after the fact. But that's what he used to do. He used to play Starbucks like that. He'd watch it rise up, and then he'd sell, and then he'd buy again when it was low, and just keep doing that.
Dang.
And he did it for years. Yeah,
dude, that's crazy.
Yeah.
Wow. Dude, we're in
5 minutes.
Yeah, we're at 5 minutes. Yeah. Dude, we gotta get used to this thing.
Yeah, exactly.
Man. Sorry, guys. You're only gonna be spending 5 minutes with us for every video.
Yeah.
So watch next.
Right.
Bam!